Rage on that beat, going crazy.
Hello, welcome everybody. Welcome to episode 5 of the Gold Trading Masterclass. Let's not waste any more time here and get right into it. Get right into this meat and potatoes, as they say. Alright, so we're going to pick a random date here. Oh, wait, let me turn off the music. Alright, that's off. Boom, boom, boom. Recording. Nice. Alright, awesome. So let's go ahead and alright, see Illis in the chat. Nice to see you. Woods in the chat. Mr. Rashid, Illis. We got Luke in the Zoom. Alright, welcome everybody. Let's get right into this. Alright, we're gonna pick a random date over here. Let's go till August 28th. I hope everything is working well. Alright, let's remove all of this. Zoom in here a bit more so you guys can see the text. But yeah, I got Monday. We're going to start with Monday. Pick a random date over here. Let's go get dates. All right, awesome. Let's put that in. That's 0714. Oh, last time we got 0728. So maybe we can do it again. 07, 08, 06. All right, let's go here. 06. What did the dates say? 2nd. So that's going to be the 2nd. All right, nice. Let's start the simulation. Get this loaded up for us. Hope you all are having a great weekend. We got a pretty interesting week up ahead. Let's go with this. Let's see, any news? We don't have any news here for this day. All right, perfect. Now we're going to use the super secret TFX simulator template so we can see the candles here properly. What else are we going to do? Lot size. Let's adjust our risk to 1.50%. Or actually, let's start with 1%. Let's start with 1% risk for the trades, as we kind of like warm up here. All right, what else? Remove that sync with charts. We got the sessions. We need the trades. All right, now we can see the trades over here as well. I need to move this up just a tad bit. Let's move this as well. Gonna see the, what has it got? PNL and pips. Awesome. And let's get rolling. Let's get rolling. All right, awesome. Now we are at the pre-London session time. All right, so pre-London, let's have a look first at the daily. You know, I think like all the time when you come into the charts, it's quite important to just see where your daily currently is. And as we can see right now on the daily, we have some kind of let's do we need to draw anything here? We got like some kind of a support level over here. We got resistance, and we have another resistance all the way over here, correct? So this range is pretty decent range. If price was to move up like 251 pips to the upside. If you're looking at the lows, the lows here have like some kind of a liquidity grab, we can see. And you know, we know this year that gold has been predominantly bullish, correct? So if we get any buy setups, I think that would be quite nice. But the daily is not telling me too much over here. I think the only other thing I'll be looking at on the daily is this resistance and this resistance. So, you know, as we're doing a simulation over here, what we can anticipate is maybe for the rest of this week that the candlesticks are going to keep moving up. You know, we're just going to get something like this, break above resistance, and then re-break the previous highs to continue moving up. So we're going to see if that actually plays out. But yeah, right now the daily is bullish. We're currently at a form of resistance. Let's go on the 4-hour here. Get some more candlesticks. We also got a pretty nice inverted head and shoulders that's currently forming for us. So we got a left shoulder, head, right shoulder. Over here, we got that resistance. I would not be surprised to see this thing skyrocket upwards. because you know this is one of the patterns that I like to use, right? So just like inverted head and shoulders or like head and shoulders, I think they work pretty damn well in the market. So we're gonna see if that can actually play out the way we kind of want it, or rather anticipate it to play out, correct? So we've already seen the daily time frame. We've seen the daily time frame right now. It has leg room to move up. And let me drive your attention back to this again. If you look at the daily, what do you notice? What do you notice about the daily? You know, you can write in the chat. What do you guys notice about the daily? It's consolidating. We got resistance and we have a support over here. So this is becoming like a no trade zone in the middle, right? Obviously, we're going to trade it because it's a daily time frame and there's loads of pips to catch on the intraday time frames. But what we can already anticipate here was accumulation and a potential distribution on the left-hand side. And you know, the good thing is we already kind of know the macro fundamentals this year have been bullish on gold. So, you know, kind of having a bullish bias here. And whenever you're having a bullish bias, you're always kind of looking to see where can I get more confluence, right? Whenever you have like some kind of a bias towards a certain direction, it's where can I get more confluence? So if I do end up getting a buy position, I can feel confident about maybe even like holding a trade longer. Correct. So I think it's quite important to always understand the overall context of the market, where it currently is on the higher time frames. That's going to give you confidence on the lower time frames. So hold your trades a bit longer. So what we notice over here is liquidity grab on the daily. Correct. Liquidity grab and clean range. That's a price continues to move up here. You have roughly about 730 pips. Okay. Awesome. That's pretty much it for the higher time frame. We don't need to like, you know, overcomplicate it at this point. We're just going to watch what the markets print for us over here. Let's go on the 30-minute. 30-minute, I noticed we don't really have any clean range on the left-hand side. As you can see, we have some kind of a resistance over here. And we have multiple resistance levels that we need to, you know, be a bit cautious about there. The hourly time frame, that's the right shoulder, by the way. This was the head down over here, and this is that right shoulder. So you can already see that volume. You see how whenever you're looking from a higher to lower time frame perspective, how it starts to make sense? You know, because we know like we kind of have an image in our head of the volume that's driving this kind of like intraday time frame move towards the upside. Now the question is, can we get through this resistance right over here? That's the next question. And let's go ahead on the 30-minute. All right, we got a bullish candlestick close above resistance. We have really nice range for sells below support over here on the 30-minute. Let's go on my favorite time frame, which is the 5-minute time frame. All right, it looks like it just did a small little grab over there. Actually quite aggressive. Quite an aggressive liquidity grab. Price just did as it broke above these highs, but we must continue investigating what's going on here. So I'm going to go next. We must continue to investigate this. Oh, okay. Let's go on the 1-minute. See some kind of a volume is coming in. Man, look at the 1-minute time frame. You can just see when market is moving in a certain direction, we're always creating new higher highs, higher lows, new higher high, new higher low. So we can see the direction on the intraday time frame here, even on the 1-minute, where price is currently heading towards. So again, kind of like making me feel more like if we get a buy position, that's going to be ideally the situation that I want to find myself in. So right now, I do see a potential accumulation breakout as well right here. Probably should have caught onto this a bit sooner. But we got a potential accumulation right here. See that little sideways movement? Let's like zoom in a bit more. We got it right over here. you have a resistance, and you got yourself a support area. So it looks like what's currently going on here, it's starting to distribute, and it just did a small break and a retest right over here. So remember, I'm not too worried about these levels on the left-hand side, because when we're expecting volume, you know, there's only two ways the price can move up. You know, that's when volume, we have volume and news. You know, so we got to look at, okay, so, you know, this is a pre-London time, kind of like, you know, expecting volume to come in the market during this time, and we're starting to get a break over here. So if we take a buy, we're going to put our stop loss within the range. All right, let me look at the 5 minute again. Fake out back into the accumulation. You can kind of see one here on the 5 minute too. And then candle started to break above. All right, you know what we're going to do? Just because of these levels here on the left-hand side, we're just going to let price print a little bit more PA for us. You know, if we can get a little bit more price action, you know, don't worry about missing the move. That's what I always tell my students. Like, whenever you're feeling like a FOMO, or you feel like you're going to miss a move, just stop and remember that you never really miss a move in the market. You know, only the ones who are patient are the ones who are going to get their setups, the ones that they actually want to get. So what I'm going to do, because I'm not confident about this move yet, I'm just going to see what happens. So we can just go next. I'm going to wait for some kind of re-entry. So you see this? This is already looking pretty good to me. Because at this point, all I need to see is a support to be formed here on the 1 minute. And if we break these highs, we're going to break these highs by like 33.19. Man, if we break those highs, you know, at that point, I think it's a good idea that price can continue to move up. And, you know, the reason here is because, you know, we've already accumulated previously right over here. We just did a break and a retest, correct? And we're coming down to retest this area again. So if we can move up one level, and the way I'm looking at this is, if you imagine just accumulation like this, breaks above, oops, gotta do this again, accumulates, breaks above, and then respects, and then does this, man, I think at that point we might as well just take a buy, you know, if we break the highs. Because there's only two ways this can go. Well, there's a few more than two ways, but the two simple ways this can go is price can either break the highs and then move up, or it can break the wick lows. These are wicks. Just imagine there are wicks down over there. Breaks the wicks lows and then fakes these players out, which are these guys here. So this is number one, and this is number two. Right? So currently at number two, we're not in the position. And I know, like, this is a situation where sometimes when you don't actually take the trade, it gives you even a better trade, because you can monitor the position. You can monitor and see like what kind of a setup it is, you know, what kind of a confluence you can get, because I think this is pretty good because we're just not in the trade yet. So we don't have to worry about like any kind of a drawdown here. So I'm just going to fast forward these candles a bit. Let's see if we can get our support to be formed. All right, we just created a support. Creating some structure. Let's see if we can zoom in a bit more. A trade. What's up, Cito? All right, can actually see it a bit better when we zoom out. So this is the idea. Now we're just waiting. Now we just have to wait. Are we together so far, everybody? Write a 1 in the chat if we're together so far. Nice. Man, this is looking really good now. All right, so let me draw for you exactly what's going on, what I'm looking at here again. So we got that previous accumulation, and now we have double resistance up over here. We got a potential fake out that's happening at the bottom of this. So again, look at what's forming here. Inverted head and shoulders. We got inverted head and shoulders. We have accumulation inside here with an inverted head and shoulders, which is also again potential liquidity grab confluence, and then that becomes the right shoulder volume confluence. That's the left liquidity grab confluence on the head, and the right shoulder volume to come in. You know, and remember what we saw on the higher time frame as well. You know, the first thing that we saw was a massive head and shoulders like this. What else did we see? We also saw that on the higher time frame, there was some kind of a resistance of the daily and some kind of a range to fill on the left hand side. Right? So let me go back on the daily. This is the range that I'm talking about. We got this kind of like immediate range on the daily, on the higher time frame, to fill this area. Because remember, just because you know you're trading the lower time frame, don't forget the higher time frames, because the higher time frames also have their own targets in mind. So you see this? That's what I'm kind of anticipating is on this daily, we're just going to fill this range. And another reason I feel good about this is because obviously, you know, we've been trading this year and we know gold has been moving up this year. So we're kind of like in line with the macro fundamentals of this instrument, right? In terms of other news, we don't have any other news to look at here for the day. So you see this? Just being patient and not worrying about, you know, missing a move or any of that stuff. You actually end up getting better moves sometimes in the market, you know? And you get these more confident moves. So that's exactly what's going on here. Now, if we break above these wick highs, I'm still going to be looking for a buy if candle can break above. And just because of how good the confluences here are, because we didn't know this. You know, like when we came onto the chart, like we didn't know that this trade was going to give us so many points. So the more it's creating that structure, the more confident we feel about it, we can increase our risk. You know, and as the day goes by, a lot of you, what you tend to do is you take even more risk. So if you win the first trade and then you're going to increase risk on the second trade, you got to reduce risk on the second trade. So you can keep what you've made for the rest of the day. All right, let's see. It's going to break here. Stop loss. We're going to put our stops let's say below some kind of a structure here. Yeah, let's put it below structure and wait for a break. I'm going to use that. I'm going to use this 1 minute support, that most recent 1 minute support. Ooh, it's flirting with that area. Man, this is why it's so important to get. Okay, let's go in the 5 minute time frame. Let's see what else is going on here. That's why it's so important to get wick breaks. You always got to break the wick. Remember, if you don't break the wick, then that doesn't confirm any volume in the market. See how close we came to it? But we still haven't broken it. So we got to break that wick. Let's go back here on the 1 minute. Oh, can we get it? Come on. All right, awesome. Let's take a buy here. Actually, I want to do something else. Let's go back. I want to use the visual mode. The visual mode makes it easier to take these trades. All right, so we're going to put now our stop loss below support over here, and we're just going to remove the take profit because this thing can just keep running, you know? So we're just going to remove the take profit. We're going to put our stop loss right below here. So if you're just joining the simulation now, you have to rewatch this So you see the reason behind why we're taking this trade. Oh, straight into drawdown. Yeah, we'll see how we're going to manage this trade. Oh, okay. Okay, beautiful. There's the push. This is the type of trades that we take on stream, right? This kind of like zero drawdown trades or even like off stream. This is what we want to see. Whenever you take a position, you ideally don't want to see too much drawdown because this is a good sign. It means, you know, like there's buyers in there and people are willing to get into these buy positions. So you see now volume is starting to come in. It's already pushed up here about like 12 pips. I don't think there was any drawdown. I think that candlestick had just, it came down slightly and then reflipped to continue moving up bullish. Holy! Look at the size of this thing. 30 pips. All right, 30 pip candle. What can we do over here? I think I'm going to secure. I have to secure a partial. I'm going to close a partial position. I'm going to close, let's say, 70% of my position over here. And then put my stop loss at the same time to break even. You know, when you're going to secure something, you got to put your stop loss to break even. All right, so where can we let this thing run if it runs? You know, this is a bit tricky over here because we don't have like, you know, the thing is like sometimes you have these really nice trades within ranges, such as, let's say, this right over here. So if we ended up taking a buy, oh, I lost the chat. Let me just get the chat back. All right, there we go. Nice to see Ellie in here. What's up, Ellie? Got Ashley in here too, the Punisher. Welcome, welcome. All right, so you know the thing is, whenever we have price coming down like this, it gives us more of a better idea of how to expect where price is going to go to next. You know, because we're kind of like buying a dip. In a sense, price comes down and then we can see it kind of go up and then fill the ranges on the left hand side. Correct. So those are the trades we'd ideally like to see when we're planning on leaving a runner in the market. But you see in this scenario, if you look on the left hand side, there's nothing. You know, there's nothing here on the left hand side. The only thing we have is like a few resistance levels. So whenever I'm in a situation like this, I just kind of look at the daily, right? I look at the daily and kind of like see if I'm on the right side of the overall market, where I'm expecting it to go. And that's why I said it's quite important to understand whenever you have a situation like this as well, such as that liquidity grab, this gives you like additional confluence for where that daily time frame is most likely heading towards, right? So that's kind of what I'm going to be basing my runner off of here. Or rather, that's where I'm going to get my confidence to hold a runner. All right, so let's see. Clean range. See price creating a low. I'm going to hold it until I think if we can hit like 3%. Right now we're up 2.60%. We secured already some partials. We're up 2.9. 2.9. We're up 3%. Flirting with 3%. Oh, okay. I want to secure something. And then look for a re-entry. All right, let's secure this. Let's secure this over here. I think that's pretty good. Let's go back on the 1 minute time frame. Remember, you never miss a move in the market. So even if, oh, we also got a pretty nice one here too. Look at this. We could have scaled in our position here. You see, you never miss a move in the market. We could have taken a buy here and anticipated price to continue moving up. Because what's currently happening over here, it's essentially the same thing that happened down over here. And let me explain this to you. Because you know the market is not perfect. It's not always going to draw it perfectly. But what you can see here is you got resistance. Fake out situation that happened below here. Left shoulder, head, right shoulder. What did this print? It's literally the same thing, right? But you just got your left shoulder here. head, and right shoulder. And when it comes to trading, there's nothing that can substitute experience. So, you know, the more experience you have on a chart, trading a certain system, the better it is you're going to understand this. Because these are like two kind of like different ways that pattern can form, right? You got one example here and you got one example here. This is why it's so important to stick to a system. To stick to a system so you can like fully understand the ins and outs, the ebbs and flows of that system. How can it print? You know, what makes a good trade a good trade? And the more sample sizing data, so you got to imagine this like your sample sizing, right? So you're going to have this already kind of in your mind's eye, like your sample sizing and forward testing at the same time. So the more you do this and the more hours you give yourself with a certain system, the better it is that you just get at doing this. You know, it's just the same way like AI or machine learning or AI, it's the same way a human brain operates. The more you see certain samples, the better it is you get at predicting certain outcomes. Correct? So that was a potential re-entry right over there. But you know, if this volume is true, we should just keep moving up. And what did we say? Markets, when they're trending, creating new higher highs, higher lows, higher high, higher low, higher high. You see, that hasn't changed. But the problem is, most of the time, we look at something like this and we think to ourselves, man, I already missed the move. You know, we're all the way up here right now. And we're just thinking to ourselves, because we already missed the move, we want to take a sell and be a hero, correct? That's what we usually think, right? Because we've already missed the move. That now it's much easier for us to take a sell because market can't move in one direction forever, right? Wrong. Market can keep moving in one direction longer than you think it can. It can't move there forever, but it can move longer than you think it can. So we've all been in that situation. So what we're going to do is if we get like some kind of a re-entry, and notice right now we can't trade the higher time frames because if we go on the 5-minute even, there's no range. The only way we can trade the higher time frames is if maybe the 5-minute pulls back, then create some structure for us to take a buy. But what can you do when the market doesn't give you that structure? You know, because there's some days where the market just moves in one direction, correct? And we're just sitting there, we're just waiting for the structure to form, but it never creates a structure and it keeps moving up. And what happens? We FOMO. We start a FOMO, fear of missing out, and then we're going to end up doing something that we're going to regret. So in a situation like this, I'll show you exactly how you can catch a trade that's already in momentum like this. You know, so we're going to see if it's a winning trade or a losing trade. The example remains the same. It doesn't matter if the trade loses or wins at this point. You're going to find yourself in a situation like this where you can see how you can take advantage of that. All right, so look at this. We've created a support. Okay, no, we haven't yet created the support. But what I'm anticipating is maybe price can create a support here and then re-break these highs. Again, it's a similar thing that kind of happened with our previous trade. Similar idea. We had a previous consolidation. Price moved up one step. Remember we spoke about this? It moves up in like levels. So this was level 1 and now this is potentially level 2. So we have to wait and see if it creates us that support. You see, you go, oh, look at that. Beautiful. You have to visualize these things before they happen. Correct? You can't just wait for the market to print. You got to visualize it before it happens. And look at this. See how unique this moment is now? Because we've gotten what? A liquidity grab. We have direction. So bias is in the bag. And trust me, like when you come on the charts, I think 80%, maybe 70% is bias. You really have to get good at finding the bias. You know, so if the market is moving bullish like it is right now, don't mess this part up because, you know, the problem is y'all are doing, you could be doing everything correct, but you're messing up on the one crucial thing, which is bias. But everything else you're doing correct, but it's just the bias part you're missing out on. So, you know, if they say the trend is your friend until it bends. So let's wait for a break. Again, I'm going to wait for a break of these highs. So, you know, just quite simple. If you rewatch this simulation, really rewatch the simulation, you're gonna understand just how simple this is. right? Once you lock in the bias. Trust me, once you got bias, guys, like you have to have confidence with bias. That's why on stream, some days we're just gonna sit on our hands and wait for the market to move. Like the trade that we took on Tuesday, it was doing nothing. Price was ranging, right? And then all of a sudden, man, price just started moving down like this. And at this point, that's when the FOMO starts to kick in. People are like fearful of missing out. People are trying to do buys instead of sells. But the market has already picked a certain direction. And then we just waited, we got a nice little pullback, and then we took the sell and it dumped like 100 more pips. That's what I mean by the market can move way longer than you think it can. And once you got that direction in, I think, you're going to feel really good about your trades. So I'm going to wait for candle to break. Oop, it kind of broke a bit high. Anyway, let's just put our stop loss right below structure here for about... Yeah, let's take this stop loss and put it below support. Take a buy. Oh, my bad. I think I put a 1.50 risk. I wanted to reduce the risk. I can always go back. All right, let's wait for a break again. All right, so let's reduce this risk now to 1% so we can keep what we made already here in case this goes south on us. So, all right, perfect. 1% risk. We took one trade over here and we're going to take another trade. We could have taken a similar entry over here too. But, just because we missed this, we still got another opportunity over here. So these players are still in deep profits. They're up like 23.8 pips right now. We just took the continuation play. So I think that's what's the difference. Stake on Vic tonight. Yeah, hopefully. All right, so we got a 1 minute here. It is moving quite nicely so far. And whenever you take a trade, I wanna show you the psychology of what you should be thinking right now. Is you shouldn't be thinking about this winning. You should actually be thinking about this losing. So as price is coming down like this, what are you gonna do? You have to already massage your psychology for a potential losing trade. If you start massaging yourself right now and you start getting ready for that losing trade, it's not going to be as bad, and when it happens, all you got to do is wait 2 hours at least or come back like just at a different time. Because what happens is during a loss, your cortex, the front, I don't know what it's called, but the front cortex of your brain, the analytical thinking part of your brain, it doesn't function as well after a losing trade. That's when you're more likely to react off of like some kind of emotions, right? So usually what they say is in finance is, whenever you get yourself in a situation like that, you should give yourself at least 2 to 24 hours. 2 to 24 hours. So it's the same thing if, let's say, you're very impulsive. Because a lot of people, maybe you guys are like quite impulsive over here. So you got impulsive buying as well in your day-to-day lives. You like to impulse buy, maybe like buy clothes or buy whatever it is that you buy. If you give yourself like 2 hours, every time you think you're going to go and do an impulsive buy, you're going to see that's going to help you with your analytical thinking again. So I think it's quite important. It's quite important. So we're going to watch this now. So if this becomes a losing trade, we'll just go over to the next day basically. Because, this is my second trade of the day. And mind you, remember what I'm teaching you here today. This is what you have to get good at learning to trade, because there's no structure for you here. Price is just moving up bullish, and it's moving up bullish with momentum currently. So again, remember, if you look on the left-hand side, you're not going to have anything here. These are really older levels that it wouldn't make even sense considering those levels if you're trading on a lower time frame. So you see, these are just like much older levels. But the good thing is we're at least breaking, I see some kind of a resistance here. That's that daily range. Remember we spoke about it? I think this is that daily range of where we're anticipating price to continue and head up. Prefrontal cortex. Yeah, exactly. Thank you. Thank you. Hourly looks good. So we're just going to hit play. Man, hourly looks good. Actually, we can base a run off of this hourly time frame here. Because I see that price was accumulating. Correct? Accumulation. What we took on the lower time frames right now as well. Fake out. Inverted head and shoulders. Volume. Oh, wow. Look at this. Price is moving up here. I got to put my stop loss to break even. Holy. Okay, let's close 70% again and then let the rest of the position run. Remember, we risked less on this trade so we can protect the money we already made for the day. So we're going to leave a small runner. And the good thing is when you do this, obviously you're going to feel a lot more confident with leaving the rest to run. You know, from here to here, you have around like 70, 80 pips. Put your stop loss to break even. And all these other people who are trying to sell the market right now because, you know, they say they got some smart money concepts over there and there's probably an OB or an FVG. That's all going to become a no VG and a no OB as price moves up because, you know, the market doesn't know anything about that. All it knows is direction in the market. Are we moving up? Are we moving down? If you strip everything away, that's all the market knows. Are we moving up or are we moving down? Simple. So the more we're in line with the market, the better I think it is going to be like, you know, for us. Because could you imagine somebody shorting the stock market? Shorting the S&P 500? Because some technical analysis? Man. All right, let's skip this. I think I'm going to secure here. If we can get to like at least like 6%. Because I think there's a little bit more room for price to move up there. Or what we can do instead is let's go on the 5-minute and trail our positions as we're heading up towards that resistance. So we're going to modify this and put this underneath the current 5-minute candle over there. Come on, fly, Goldie. All right, we're about to hit it. 5.9 T7, 6%, securing. Oh, yeah, secured right underneath 6% right there. So I think, you know, that's a pretty good move. Let's see where it actually ends up going, though, before we go over to the next day. Let's skip this. Let's skip. Okay, so it filled up the range. Beautiful. Again, remember on the daily time frame what we spoke about? Was that daily clean traffic on the left-hand side, even up towards this next zone on the daily time frame. So that's going to be the next resistance point. So let's go back on the hourly. See if it could have made it up there. Yeah, it looks like we just about made it up there. Nice. Awesome. So I hope you found like, you know, a little bit of value over here in terms of how we actually took this trade and how we use the fact that markets are fractal to our advantage of how we caught this position right over here. We saw it on the higher time frame. We broke it down from the daily, got a bit more detail on the lower time frames when we saw this inverted head and shoulders. And that same pattern was basically what our first and second trade was, what we saw right over here off the HTF. So I think, you know, we can like go over to the next day now. So if that makes sense, you know, write a 1 in the chat if that made sense so far, if you kind of like following over here. Because I know some people, you get them from like different disciplines. Some people here from smart money concepts and you're used to seeing chart work in a different way. So, you know, I think this is going to give you some insights as well. Because I know the way you plot charts and stuff on smart money concepts is kind of different. You guys kind of plot them kind of differently. So, you know, what I'm showing you here is real-time trading. You know, also smart money, I guess, can be real-time trading. But yeah, I'm showing you because I'm a scalper. You all know me for my scalps. And to be a good scalper, you have to be good at reading price action like on lower time frames. And the more you understand structure, generally speaking, the better it is that you get at becoming a good scalper because of just how fast price moves. So for me, it's more important to see like what's currently happening in the market. How can we take advantage of that? And that's it. Just a few confluences that we use, keeping it simple, but making sure it's simple enough that we don't hesitate, right? We don't get analysis paralysis. Some of you get analysis paralysis because the smart money concepts you're learning, it's like you're going to have a buy and a sell happen at the same time. So it's like, what can I do? Should I take a buy or should I take a sell? All right, so we got the daily time frame is you have resistance over here and you have another resistance here. Remember, this is if you watch back this stream from the beginning, you're going to I like how you deal with FOMO. Thank you. Yeah, just never miss a move. Just once you understand how to trade the lower time frames like the 1 minute chart, for example, you find less FOMO in your trading because obviously when you're trading these higher time frames, you can definitely feel a lot more FOMO because you saw how the 5 minutes were moving up, right? It didn't even create any structure for you to get in. It didn't even create any pullbacks for you to get in. At that point, you just go and take a nap, right? And wait for the next session. But if you can trade at least a 1 minute where you can get a bit more detail, then you can take really good advantage of that. But again, trading the 1 minute, that's going to require experience. It's not going to happen overnight, especially if you've only been trading for, let's say, like 6 months. It's not going to happen overnight. You're going to have to still develop that character of how to be disciplined when trading such a lower time frame because there's a lot more margin for error. But if you give yourself like some patience and you truly lock in, then I don't think it's going to be much of a problem. You can definitely get your bearings in quite quick at that point. But let's see. We have a potential break and a retest over here for price. Maybe to continue to move up bullish. To fill this area on the left-hand side, we have, still quite a nice range there. So let's see what we can catch. We're currently at that daily support right now, as you can see. On the lower time frame, daily support. Let's go on my object list and can kind of remove these. Let's say delete. All right. Let's just get that deleted. All right, perfect. So what do we got over here? We got some kind of consolidation happening on the 5 minute time frame. It's kind of a garbage PA, to be honest, because... Sorry, I keep losing this thing. It's kind of a garbage PA because we have a support here. We got another support here. Maybe if we can take a buy for price to fill up this range, that could be a good idea. Because we're just looking and seeing where the clean traffic is. Man, what is wrong with this thing? It's going crazy here. Oh, is it the magnet? Okay, there we go. Yeah, we got some kind of nice clean range on the left-hand side. Have about, like 36 pips. We can see price is currently accumulating over here. It's kind of dangerous because whenever we see this kind of accumulation, it's not really the best type of accumulation because it's wicking a lot. Right now on the 15 minute, and we can see there's loads of wicks over here. But we do have like some kind of a liquidity grab confluence below here as well. Remember, it's always that awkward looking wick that breaks structure. That's what you're kind of looking out for. So if we can re-break these highs and then fill this range, it could be a good idea if we wait for candlestick to break above resistance over here and then to continue to move up. Or better yet, maybe we can wait for a candlestick to close above resistance, such as this, and then re-break the previous highs and then to continue to move up to fill this range. But currently right now, it looks like it's kind of rejecting over there. All right, let's wait for a candlestick to close. All right. So we just actually broke that wick high. But I think the stops would be quite big. Let's see. It already filled up the range. All right, my bad. I fast forwarded that too much. But it already moved up about here like 24 pips. It already filled up the range on the left-hand side. So that was the area that we were initially looking at. So I think in a situation like this, because the stop loss would be too big below this support area here for this range, you probably want to put it within the range, just somewhere within this area where you don't expect price to come back into this area. Because you see what happened here was what we thought initially was going to be a fake out happened again twice. So you had another fake out situation happen over here. So sometimes the market can be quite slippery like that, where you're going to think like this was the fake out to make the move happen. But at the same time, we didn't break any key wicks, and we also did not close above any kind of key resistance. Instead, it came back down, closed again bearish, but this time it broke at least a key wick area with some nice range over here, you know? So I think that would have been the move. 25 pip stop loss and some stop loss. I mean, 25 pip range, or rather, you just push 25 pips with your stops within the consolidation kind of zone that he was breaking out from, basically right here instead of right here, because that's way too big. All right, so we missed it. We missed it. No worries, because what do we already know, guys? What do we already know about the market? We never miss a move. We never miss a move in the market. It just means that you just have to wait now just a little bit longer, you know, so you can get another type of entry. That's all that means. You never miss a move in the market. Remember that. All right, what are we doing here? We're accumulating. Accumulation. Oh, we could have taken a buy here. Damn, I gotta lock in a bit more. We could have taken a buy here. Stop loss below this candlestick. Man, I gotta lock in. Stop loss below this candle over here to fill this next range. Because you see in this scenario, look at what we have happened. A candlestick closed above resistance for us. It closed above resistance and, you know, it broke to fill up that range. So just gotta keep waiting then now. Missed another move. See if we can create a support. Oh. Okay, so we're starting to break below support. Let me see what's going on here. Could have taken this buy here on the 5-minute as well. Look at how good that 5-minute looked. Man, I wish we caught this move. Beautiful. Look at this. Left shoulder, head, right shoulder, volume, clean range on the left-hand side. This would have been the move. We have about 36 pips. 5-minute, close above resistance, stop loss below here. You also have like a mini little liquidity grab situation that happened over there too. Yeah, now we're trading a little bit further into the London session over here. So I think we miss our moves. We miss our moves on this day because we're too focused on the 15-minute time frame. All right, then let's just go over to the next day. Let's see what we got in store for us. Ooh, this is nice. You can see there's volume in the market here already. So whenever price is moving like this, it gives us a lot of opportunities to trade whenever we have like really big swings like this in the market. Want to buy an SRT next year? Yeah, maybe like 5 years. I'd have buy at the right shoulder. Look at this really nice range here too. Man, this is awesome. This is like an Asia session move towards the downside. So one thing you always gotta think about markets is markets love to mirror each other. So whenever you see like a clean traffic situation like this, you're always thinking like, okay, so if we start to break below these wick lows, then we can most likely fill this range. Because this is a classic reversal pattern. You know how we like to trade that reversal pattern if it breaks like a key level of structure, like it did right over here, and then it starts to consolidate like this. But notice it didn't break the highs. It broke the lows. It confirmed momentum to the downside, where it even had more range for price to continue moving down. So that kind of like increases your probability that the trade can, continue to fill that area. Vic, try using FX Replay. It's really good. It looks just like TradingView, and you can toggle through different time frames. Oh, nice. Let me just read some of this chat. Sharky movement, is that? Oh, is that Friday? No, that was Monday. But yeah, it looks like we missed the meat and potatoes of this move. It's already done. It's already filled up the range towards the downside. So, unfortunately, we can't do much about this because this is the time that we're coming onto the chart here at 8 a.m. Eastern. So whenever you find yourself in a situation like this, just wait. Again, I think most of the time your problems are going to be solved with just waiting, because we've already missed the move. Price has already come down, filled up this range towards the downside. Not much we can do now. Let's go back on the 5-minute. All right, so creating some kind of a resistance over here. And we have some kind of a range to fill up here too. That's going to be around 36 pips. 36 pips. So there's a few ways we can play this. If you feel comfortable about what's happening here on the lower time frame, as we do have like a potential liquidity grab situation. Remember that one pattern that we keep seeing throughout this whole simulation, guys? It's the inverted with that potential fakie and an accumulation in the middle. So we can either wait for a candlestick to first close above resistance over here and then get in as the next candle break its highs, or we can investigate the lower time frames like the 1-minute chart and see maybe we can catch something in here already that we can anticipate some kind of a distribution, right? Or the other option is we can just take like an impulsive buy as price breaks above these highs. But for sells, there's currently no sells in the market because we don't have any ranges to the downside. You see we got some rejection wick right over there. We keep going back. We have like some kind of jagged price action over here. So the only sell maybe would be like below 33.44. But at this point, I think this most recent range is our best shot at potentially catching something. So let's go on the 1-minute. The 1 minute's already in a distribution. So what I'm going to do is let me just investigate again the daily time frame. All right, so daily is kind of bearish. Previous daily also closed below that previous resistance. Could be doing like a small break and a retest to keep moving down. Yeah, this simulation here has definitely been a bit more technical. I got to tell you, we got some crazy weeks. It's quite difficult, but let's see. I'm going to take a buy if price breaks above its highs, if it re-breaks its highs. Because you see, I'm not yet in my trade, but I see that we have a potential breakout situation that's currently over here. We got some accumulation and it's currently in a breakout. So this would be drawdown. And this sometimes, like what I like to do is I'm just going to watch the chart again if I'm not in the position and then just see if I can, especially because it's not moved so far. It's still within our kind of like our main entries. So I could risk a few, I could afford a few pips for price to break. That's only going to be like an additional 4 pips. And then for price to potentially keep moving up. Or what else we can do is look at this accumulation here. Remember, as we're drawing this on the 1-minute time frame, we're having the HTF in context of where we think or visualize that price can go to next. But you see, we have an accumulation here, and we got one accumulation right over here as well. So we got this bigger one, which is potentially a safer one. And it also has a small little grab situation that happened down over here. So it's kind of like squeezing out. You see, it's kind of like squeezing the sellers. It moved up already once, but it didn't take out the highs. So we could either wait for this majority one here to get broken, or we just get in on the reflip. What should we do, guys? I'm gonna leave this one to the chat. What should we do? Should we take the first one, or should we just be a bit more patient and take the second one? What should we do? What should we do? What should we do? Should we go aggressive, or should we just be a little bit more patient? All right, we got 1 second. Yeah, I'll leave the chat to decide. Because, you know, the first one here is not that bad either. Like, because we're not yet in. So if it re-breaks the highs, just for context, like, it is a bit safer. But, you know, at the same time, let's see what you guys would do. Be more patient. So we got 50-50. Come on, guys. Come on. What should we do? I like the flip. Aggressive. Should go aggressive. All right, then. Let's go with the flip. Let's go with the flip. So for the flip, we got to wait for price to break these highs. That's going to be the flip right there. Wow, look at the way it came down. It's going to load up here in about a few seconds. I think, where does it do that? Oh, there we go. You see that? We can just avoid a potential whip just by waiting a bit longer. Waiting for that flip. You see this? Avoided a potential whip. Avoided a potential whip, and now we can just monitor. I see we got a potential liquidity grab situation if we can form a support there. Yeah, at this point, we're going to have to wait for at least these highs to get broken. Or what we can do instead is also look for a sell bias. Because as we're planning out our buys, we also got to plan our sells. So we're kind of like cornering the market here. So you see how we've cornered the market? So we're going to see if it breaks these highs, we're going to take a buy. If it breaks these lows, we're going to take a sell. And right now what's happening here is just some kind of like shark behavior. You see how it took out these previous buyers? And then now look at how it's taking out these previous sellers. You know, this doesn't happen by accident like that. There's definitely like market participants getting involved here. So we're just going to avoid that whole unnecessary zone and get like more of a solid confirmation above the highs or below the lows. Oh, you see this? Look at this. Look at what's happening right now. Look at what's happening right now. Volume is coming in. Good sign. If we create a resistance there, I'll take it on the break a little bit sooner. Because I'm going to be looking at this as a little bit of a fake out situation that happened down here. But we got to form that resistance. All right, nice. We formed the resistance. Okay, we could take it sooner, but the difference is not that big. Let's wait. Let's wait. An extra 4 pips to be on the safe side. An extra 4 pips, you know, that's not going to make anybody here lose sleep over just a few pips. Let's see, created a support. The more we do stay here, the better it is looking. You see, as it's coming down, it's forming us a little bit more structure. That's always a good sign. It's accumulating orders right now. So you can imagine like all these orders here, they have to distribute somewhere eventually. See that? It's moving up. Volume is coming back in again. Again, the buyers are coming back in. See that buying activity? Look at what the buyers have done as well. Can you see what they've done? Look at this. They've trapped the sellers in there. So they're about to get short squeezed. And that's where we're going to take our buys. Now, if this candle reflips and breaks the highs, I think that should be good enough. Yep. Ooh, it just moved out a little bit too fast here. Yeah, this thing is quite sensitive. You know, I don't know, like, you got to reduce the speed a bit more. Because, you know, we're kind of fast forwarding everything now. But this is what I want to see. I want to see that break. Let's just take it. Let's just take it up here. It's okay. We'll do 1.50. 1.50. Let's put our stop loss. You see how it also broke like that with that much volume? Because there's a lot of market participants in here. You know, we can see what's happening. We're not involved, but we can see what's happening. We can see that accumulation generation. And then as soon as it starts to break, that's basically the market telling you, hey buddy, it's time to go. You know, you gotta board this bus over here. We're gonna leave you behind. I know it seems a bit crazy if maybe you're not used to trading the lower time frames, or you're not used to how we trade usually on a day-to-day basis. I'm pretty sure the charts look kind of confusing to you because there's a lot of candlesticks here. But you know, just to help you kind of get your bearings, forget everything that's happening here for now and just focus on what's currently happening in the market right now. We have major accumulation and we have some smaller accumulations in here. What we're essentially just trying to get, because this is a point A, we're trying to get the distribution to the upside, right? So this is accumulation because, you know, you've probably heard this a lot of the times, but markets only move bullish, bearish, sideways and downwards. So again, understanding the bias is quite important. What stage of the market are you currently in? Are you in a sideways moving market or are you in a trending market? You know, like the first trade we took, we were in a bullish moving market with a lot of momentum. Right now, we're in more of a sideways moving market and we're about to get a potential breakout from the sideways because this is where I like to trade. Because I believe that these are the areas that price actually comes out from. Whenever you see price move, it's coming out of these areas, correct? And why is it coming out of those areas? Because, you know, that's where you're going to have majority of the market participants keying in orders, buying and selling, buying and selling, buying and selling before distribution occurs. So that's what we like to call the inception, right? That's the point A. And whatever this is going to be next, it's just going to be paying out. And you can always still scale in if the market gives you an opportunity. You can push down and then give you another trade and then maybe continue moving down again. But we like to get into the inceptions, which is right over here, which is this. So we just took a buy and I'm going to put my stop loss. Let me see what the 5 minute is doing. You can break above these highs. Maybe just put it within the range. Because on the 1 minute time frame, we don't really have a structure to use. We can use it down here, but I feel like that's a bit too much. Maybe we can put it within the range. Because this whole area here is about how many pips? That's about like 38 pips. So we can put it over here. Because if price is breaking out, then I'm not anticipating it for it to come. Oh, shit. Holy. Oh, man. I just got stopped out here. Okay, let me see what happened. All right, so what I'm going to do is, let's see if it creates me a support. I can get a support. I can get a re-break of the highs. At least I'll have some structure. You know, that's a problem. This is actually good that this happened because now I can show you like a problem with also just putting your stop loss within the range is there's no structure. You know, if you have like a structure like this, something like this can still get, you know, kind of respected over there because it's structure, right? But when you put it just within the range randomly like that, you're expecting volume to follow through. But you see in this situation, if it doesn't, you're kind of like basically screwed because this could still respect these lows, right? But it has nothing to respect in the middle over there. So that's why I said I'm going to wait for a support to be formed. At least we can try this again with like some structure. Let's go next. All right, let's fast forward a bit. Yeah, this is actually quite a choppy area to be trading as well. Very choppy. But it's okay. We were born in the darkness. We learned how to trade in the trenches. So this is just another day at work. Let's see. You know, the important thing is managing your emotion. That's the only thing that kind of screws you in trading, is when you can't manage your emotions, right? You can't manage your emotions, you can't manage your risk. Because now you think you're going to be like feeling about revenge trading this. This is not a revenge trade. This is just me thinking that if we just formed a bit of structure, I'm going to give my trade like a second chance here. And at the same time, I'm also going to reduce my risk a bit more. And if it doesn't work out, then, you know, we can just move over to the next day at that point. Because you can give yourself every day like maybe two trades. If both of your trades fail, then you can call it a day there. So what should we do? Should I take another trade here, or should we just wait? Let me follow my rules. Let me follow my rules and wait. Because I tell you all that you should normally wait after taking a losing trade. So we can stop thinking with the emotional side of our brain and more of the analytical side of our brain. So I'm going to wait. But just for visual purposes, let's see what would have happened if we took the trade. Okay, it broke the second time, retested, you had some structure, and remember this previous structure was still respected. The problem is we had no structure where we put stop loss. But you see this one still got respected. That's why I said if we even had this little mini structure here, this is still powerful during a breakout. And then consolidate, and eventually kind of filled up the range, but you know, kind of choppy there. But yeah, let's just wait and see what happens next. Beautiful runner though. Let's wait and see. Ouch, I hate those trades. Yeah, exactly. Straight to drawdown that was. Well, the good thing is you know you're wrong quick. Okay, I'm not locking in here properly. All right, let's delete this. Let's draw our new zones. We got a resistance, and look at the time right now. This is about 40 minutes into the London session. So we've just had our pre-London trade, and now we're taking our London session stream trade. So let's see what the London session here does. But right now we have a resistance over here. We got another resistance up over here too. And at the same time, we have a support. If I can just grab this thing. We got a support here, and we got another support down over there. So let's see what market does. Let's go on the 1 minute time frame. Nice little accumulation breakout that happened here. This was at 10:27, so this is about like 27 minutes into the London session. We had a nice break here. We could have taken this move actually. Could have taken this move because, you know, price was moving up. So we can look on the left-hand side and see those volume, right? You see volume over here, and then we can just look at that as an accumulation for price to break above. But let's just wait. All right, we're approaching a support level now on the 5 minute. And we have to... Okay, we just got a candlestick close here as well. We could take a sell here and put our stop loss within the range. But, you know, since we already got a losing trade like that today, maybe we're not going to do that anymore. Let's see, this range here is about 26 pips. Stop loss above the candle will be 32 pips. So, you know, it's not looking too good. If I go on the 1 minute time frame, what we can see on the 1 minute time frame is we don't really have an accumulation play. we don't have something to consolidate and break out from. Just have a little fake out that happened here, and this is potentially just coming to discipline these buyers because maybe, you know, they got greedy and they thought this thing was going to go to the moon, but eventually it came out and looks like it's about to stop those buyers out over here. That's why it's important not to be greedy as well. Always keep in mind that these things can happen and the market will come back to correct that move, or rather like mitigate that move. So if you got like a good trade like this, worst case scenario, it's going to be a break-even trade, especially if they're pretty decent push. So since I'm not seeing any confirmations, I don't see any stop losses to put that are not aggressive. I'm just going to continue to wait there. But that was nice, you know, a little break and retest, clean range on the left-hand side, candlestick close below support. That's kind of what we want to see, right? That's kind of what we want to see. All right, nice. So, you know, eventually still played out. From the bottoms, eventually still played out. But remember, guys, you never miss a move. Rule number one, if there's anything you're taking with you towards the next week, take this with you, that you're never going to miss a move in the market. So whenever FOMO starts to creep in, just know that the next trade is around the corner. So you know how many trades I've missed already in the simulation? Just insane. But let me just wait. I'm going to keep waiting. I'm going to wait for my next big move. Oh, okay. So this is looking interesting. If a candlestick, we're going to take one more trade. We're going to take one more trade. It's going to be a beautiful trade, but that's because we're going to put like 2% risk and then see if it can run, because I see we have a pretty nice range here to fill, correct? Because I'm not just doing this randomly. I also see there's an opportunity in the market when I'm doing such a thing, because you see we have, look at this on the left-hand side, no room for price to move down. You see how prices come? Look at this. What is it thinking? We got a lot of like rejection wicks. We got a lot of support over here. You know, think about this. If you were a candlestick, where would you rather go? Where would you rather go if you were a candlestick? You know, we can imagine if this is, let's see. Let's imagine this is Serkan or Luke, or, you know, Woods or Extraordinary. If you were a candlestick, see, you know, this is you right over here. Happy little candlestick. Where would you rather go, you know? Where would you rather go? To the moon? We got some skyrockets. Yeah, because, you know, if the candlestick's going to look at this over here, it's going to think, man, this is a lot of work to get through. You know, that's a lot of work to get through. We like the path of least resistance. Money flows in areas of least resistance. That's what we like to see. So, you know, you can see some rejection wicks here. We got liquidity grab confluence. Now I'm waiting for this candle to close above that resistance so I can take a buy. And I'm going to take this buy, and we have a range here to fill. That's like a 63.5 pips, right? That's what we're going to do. And the time is right now, we're just about 1 hour, 20 minutes into the London session. Let's see. Oh, okay. Candlestick rejected. You see, this is why you have to wait for candle to close, right? If a candle does not close that resistance, then there's no buy. You see? All right. Now candlestick is looking like it's about to close, hopefully. It's testing, flirting. All right. So remember, you got to wait for a candle to close. In a situation like this, it's much better for you to just wait for the candle to close. Oh, how many more? We got like 30 simulation seconds. Can we close? Look, this is something that I used to do so much back in the day that I lost so much money doing this. You know, it was trying to outsmart the market, thinking that, oh, you know, there's only 19 seconds on the clock. Maybe it's going to close. So what I would end up doing is taking a buy over here. I would take a buy and then price would reject that zone. So this happens a lot in the market. Basically, I'm explaining you this because that's exactly just what happened to this candle over here. That's exactly what happened to this candle. That's why I'm explaining to you now. You have to wait for those candles to close. See, we're still whiplashing. It closed, but like slightly below that level. Still no confirmation. Man, I had like a sticky note that always used to say, wait for candle to close with exclamation marks. Because there's certain setups like this where you kind of benefit a lot from just waiting for the closure. And you kind of monitoring at the same time. I'll impulse entry this if we break these highs. Just so you know, I'm going to impulse if this breaks these highs. Because you see, no previous candlestick was able to break above that high over there. But I'm gauging it with the time. You can't really see the time, but there's a time over here that says 11:37. So if the candle is literally about to close, I'll just wait for it to close. But if I see we have 2 more minutes down the clock before the candle closes and starts breaking the highs, I might as well just impulse as it breaks those highs, because sometimes volume tends to kick in. In the last even 30 seconds, you can have price move up like 20 pips. You see, this is like 10 seconds. We got 10 seconds here. So you see, in this situation, instead of taking an impulsive sell, look at this. It's breaking here in the last 10 seconds. It's breaking. You know, some trades this week, I got my trade in the last 6 seconds as it was breaking. Like an accumulation play. Like price would just consolidate. And in the last 6 seconds, it starts to break. You know, these are the like small little psychological tricks the market does to you once you start scalping. Then you start to see like, okay, yeah, now I'm starting to realize like scalping is no joke. Trading these lower time frames is not so easy. But okay, now you see you got a candlestick here close above resistance, because you have to make these decisions. You see what I mean? Like the window of making a decision is so small. What are you going to do? You're going to wait for candle close? Are you going to get in on the break? Like that window can be so small because these are high probability areas. Correct? So in this scenario, it's pretty good because we could wait. We could just wait like 10 seconds, candlestick to close, and then reflip to break the highs. Then we're going to get a buy here. Oh, there we go. So we just took a buy. So if we're taking this buy, where can we put our stop loss, guys? Where should we put our stop loss? Remember, this is going to be the final trade of the simulation, and we're just going to let this thing fill up the range. Obviously, we're going to secure like some kind of a partial there. So if it moves up, awesome. If it moves down, we still get to keep like 50% of our profits, and of the simulation here, like 2.40%, which is not bad. I think candle closed. What's this? I think candle was closed over 33.55. Yeah, now we finally closed below the entry candle. All right, let's do below the entry candle. I think that's a good idea. SL under the breakout candle. Exactly. We're going to put our stop loss right underneath this candle over here. It's a good area to put. We don't want to do it here. Remember what happened last time? You're only going to put it within the ranges if let's just say it's really big. It's like a really big price action. Remember what we had before was like a really big price action and no structure. Then we're going to put it within the ranges. But such a price action like this, we can afford to use some structure here. So we're going to put it like this. TP, we're going to put TP at the top of the range this time. And, you know, now we're just going to focus on managing risk. Oh, look at this, straight into drawdown. Oh, so we just got to focus now on managing risk. Like, what are we going to do if price actually fakes us out? But, you know, we got to stay confident. You know why? Because we have all of these. You see, we have our buddies over here. This is like going to war, yeah? When you trade, you're kind of thinking like we're going to war. So you got all our buddies here. You know, we pushed up price. We rejected support. We have rejection wicks. Doesn't matter if you're smart money concepts, ICT, Fibonacci. We all understand what's currently happening right now. We also got a reversal confirmation pattern right here. You see how we broke below that support? And then price started to consolidate below that support. That's a reversal confirmation signal right over here. So we have a lot of points going for us than we do going against us. And this is an important trade. You got to take a screenshot of something like this, right? Because let's say if you're doing a challenge, these are the types of trades I was doing when I was trying to get initially funded and build my personal account. These are the types of trades that I would take. The really high confluence trades where I see, okay, you know, overall market direction, we have in terms of liquidity grabs, and this does not look good to move down, and just small things like this that really add up to create a really good position. Like you just want high confluence trades. So here I would say we have clean range. I'm going to let this play. Clean range, that's 1 point. We have candle close above resistance, that's another point. We have support areas over here, which is difficult for price to move, but it's easier for it to move up to fill this range. That's another point. That's already 3, and that's enough. Usually like 3 confluences is really nice. If you can find 3 confluences, that's what you want to look out for. 3 confluences. Here, 4th confluence, reversal signal, break below structure. And you know what I'm going to do? I'm going to put my stop loss now to break even. I'm going to put my stop loss here to break even. I'm not going to secure just yet. I'm going to let this thing run just a little bit more, as we tend to like fill up most of this range here. Okay, nice. Now I'm going to secure. I'm going to close a partial, and we're going to secure 80%. We're going to secure 80% this time, because majority of the range has been filled. Remember, we don't want to be greedy as well. Majority of this range has been filled from point A to point B. So where did we stop? Oh yeah, I think now we got the 4th point, which was a reversal confirmation signal over here. So you see how those confluences line up to make such a good trade? Because even if this was a losing trade, the idea is, given the right amount of sample sizing data that you collect for yourself, you're going to come out on top. You're going to come out profitable in the blues. So if you just kept taking this trade over and over and over again, you're not going to win all the trades, but you're going to have a higher probability of coming out on top. Too much greed, you'll never be freed. Like that. Yeah, too much greed is not a good thing. So if we want to be greedy here in the market, we got to secure a partial. And then there's a way that we can be greedy like this. You know, we can trail our position like this, secure partials as price is moving in our favor. This is how you become greedy. So you got to be greedy, but you also got to be smart. Ooh, let's see. Because if this candlestick reflips and breaks at lows, you know, we might as well just get out at that point. Oh, is it gonna stop us out? We're up currently on this like 22.4 pips. I secured a partial here at about 32 pips. Let's see. Only if it like reflips and breaks these lows, then I think, you know, we can get out. I'm going to look for like maybe around, I'm going to wait for my TP to get hit. Come on, get up there, Goldie. Can we get take profit? There we go. TP hit. Range has been filled. Amazing trade. Now all you got to do is just do this again. And again, and again, and again. And that will compound into something beautiful. You know, that's why they say people don't like being disciplined until they see the results that being disciplined can give you. So that's all that trading is. You find yourself like some nice confluences, some nice ways of looking at price action. And all you got to do is repeat that over and over and over again. And, you know, the rest is just going to be history. But this was, again, this is something that you got to give yourself time, you know. You got to give yourself time to understand how I'm taking these trades. Because this trade here, for example, you see this one down over here, I was executing on a different psychology, if you notice, than something like this. Because something like this is much more clean for me to see and much more clean for me to explain to anybody. But this, I would say, if you're still learning how to trade like TFX concepts, try and avoid certain trades like this. You know, the concept is still relatively the same, because you kind of see like we had resistance here, candle close above, build up the range on the left-hand side. You know, that's awesome. I'm pretty sure like some of you could actually have caught this move and had this become a profitable trade without mismanaging on that drawdown. Or maybe some of you could have gotten break even. But this was quite difficult. That was a lot of choppiness, but the concept remains the same. And that's the thing. Like once you have the concept, once you understand the concept, you're going to be able to trade all manner of trenches. You know, you're going to be able to kind of diversify your abilities to trade certain different messier, let's just call it messier price action. But the concept remains the same. right? So hope you guys enjoy this little simulation here, and I think that was a pretty good way to end off this sim. And I will see you all for London session tomorrow. So let's watch this happen in real time, and yeah, let's have a good week. Adios.